Hey traders, welcome back to another episode of Market Skycast, the official podcast of Blue Sky Trading. I'm your host, Justin. We are here with Coach Matt and Coach Rizz. Coach Becky is out this week with a well-deserved vacation, using some of those sweet gains to go down to the Caribbean, go scuba diving, all that fun stuff. And I hope she drinks a pina colada for me. I don't know about you guys, but we could all use one at this point. But before we
God
get
knows you
started,
could.
Just wait till
couple
we talk
house.
about the technicals here in a second.
Yeah, maybe I want a pina colada right now, right?
Yeah.
Before we get started, a couple housekeeping items. We still have this insane sale going on. Welcome 26 is a code. If you are a new trader with BluSky, go ahead and pop that in and checkout. It's going to give you 50% off a launch plan. You can get started for under $30 with a 50K account. And that's got to be one of the best sales in the prop firm industry. And not to mention, we offer daily payouts. So one of the lowest barriers to entry and one of the most trader-friendly payout policies. So again, the code is welcome26. Make sure to tune in. And then secondly, we have our coaches and the president, Mike Tolbert, streaming all day in our Discord. So if you don't want to pay some guru, if you want to see real trading in action, real education, join our Discord, get an evaluation, and let's make some money. Now that we got that out of the way, now, guys, we talked about this last week. Coach Rizz specifically brought up the geopolitical climate and the conflict. I think at the time we were recording the last one, they were meeting in, was it Switzerland or they were meeting somewhere?
Geneva.
Basically discussing the terms saying, do this or we're going to do this. And you guys are on the West Coast or the Central Time. I don't know. I woke up on Saturday and the United States did their thing.
Mm-hmm.
They did what they said they were going to do. So I just want to get your kind of candid reaction. Like, what were you doing when you just saw this, and what did you think immediately? Did you think about the markets? Did you think about people? Like, we're traders. I know when I see news like that, I immediately think, oh, I'm going to short the hell out of this market on Sunday open, So, Coach Rizz, let's start with you. Like, what were you doing when you saw the news, and kind of how did you react to it, and what are your thoughts on it?
I was overall really concerned about it. The situation overall is very unfortunate that we couldn't come to some kind of normal resolution without inflicting a conflict, because the conflict already has changed its scope, from being a weekend project. Now we're out to a 4-week project. We have seen some different things in the market, but I was just really kind of just shocked and really just kind of sad that was the result of it. Really anticipating probably the market ripping is what I was doing.
It's funny you say that because sometimes war's bullish, but then the news comes out and the market, NQ drops 800 points, and then as we saw, it recovered like almost 1,000 points right after. So I don't even know if it matters or it's just people playing the reactions, and it's just a crazy time to be in. Now, Coach Matt, same question for you. Like, what were you doing? What were your thoughts? What did your mind immediately think of?
I live on the left coast side of the world here, Justin. So when that news hit the wire, it was like 1 a.m., 2 a.m. my time, and I had just woken up and looked at my Twitter feed, and the only thing I could see was military action in the Middle East. And my initial reaction was similar to Rizz's, I would say. I always think about the human interest first, and the whole difficulty there, and kind of the expansion. And then I immediately, because I'm that deep thinking analytical that never stops, for the next 3 hours, I scrolled Twitter thinking about where this is going.
Exactly, right?
Yeah, because Rizz was right. The way we were getting sold initially was it was a weekend warrior type situation. In fact, after the first day, there was reports that the Trump administration had reached out to the Iranians and talked about a ceasefire, which the Iranians denied.
Yeah.
And so after that, it became a 4-week saga. And after we get to the 4 weeks, Riz, I kind of feel like it's going to be a 2-month saga. And so it's like, where is the end conclusion of that? But that was the secondary question. My initial reaction was, oh my God, we're actually doing this. And two, then it went to the market pretty quick, honestly, thinking about crude oil. And, it's kind of, you knew that was going to happen. You knew the crude was going to jump. And if crude's going to jump like that, the stocks are going to sell off. And, gold gets a bid, silver gets a bid. So dollar gets a bid, silver gets a bid, gold gets a bid, crude gets a bid, and market's down. That's going to be the reaction come into a Sunday evening. But you know, if that's going to be the initial reaction, it's not going to be the conclusion because
Yeah.
dollar, gold, silver, crude don't run together. They
Mhm.
can't run together. There's a divergence between them. And so it became market centric, but and initially it was human interest. Like I wouldn't say I was surprised. That was something we talked about in last week's podcast. But even though it's not a surprise to see it, because you had two armadas lining up against the Iranian coast, like we had a bigger military build out than we'd had in 20 years. So
Mhm.
it shouldn't have been surprising to anybody, but it was still shocking when you saw it. It was still shocking when you saw it. And there's some concern there, and obviously we can debate the political side of this till the cows come home, but that's not the purpose here.
Yep.
And so on the market side of the equation, I obviously got concerned about the market. The market's going to have a very difficult time fighting the uncertainty of the environment. And that's the biggest problem right now when you're looking at the general market is crude spiking, everything else is volatile, but the general market is going to have a difficult time carrying a bid when we don't know the end game and what we're actually trying to accomplish. And I'm not trying to make any major political comment there. It's just from a
Mhm.
market perspective, the market doesn't do well with uncertainty. The market can take negative news with the best of them. Like it can take a punch with the best of them. It can't survive uncertainty.
Mhm.
And that's what really kind of happened this week is kind of going back to Rizz's comment. Is it 2 days? Is it 4 weeks? Is it 4 months? Like what is the end goal here? What are we trying to accomplish? Because the market is based on pricing structures. And when you can't price in the news, that becomes uncertainty. And the only thing that lives in uncertainty is volatility.
Mhm.
Yeah. And it's crazy when I got the news, first I was like, wow, this is happening. And then, the ceasefire got offered. They said no.
It's a
Like,
no
oh
quick.
no, oh
Yeah.
no, not this again. And then secondly, the trading side of me just goes, I'm
Mhm.
sizing down this week. I'm limiting my trades. I'm
Mhm.
only hitting major pivot points and I'm staying out of the noise. And if a headline comes out, I better have a damn stop loss on.
Can
That's
I talk about that very quickly? Because I think that's a
yeah,
wonderful point. And I'd like to get Riz's take on that as well.
yeah, for sure.
Because in these environments of uncertainty, I think it goes without saying for me that it's scale down. I do
100%.
I
Have
do
to.
less and I do less with each one.
Hmm.
And so I call it personally the volatility playbook. And whenever you're in moments of volatility or uncertainty, you have certain things you do. Like there's a rule in the market that you should always be trading. That doesn't mean you should always be trading full positions. That
Hmm.
doesn't like a partial position. Make sure you're getting your structured patterns. You're taking less scalps. You're taking less trades with less position is kind of
Hmm.
what I saw. And I can only tell you kind of the way I behaved this week was, and maybe this was a little bit more just due to what the market was doing and the timing that I was trading in the market. But the number one pattern that I liked trading this week was the intraday reversal off of a sell-off coming
Yeah,
in, coming in.
I'm right there with you.
Like you come into these lower levels on the daily chart, like these levels around here, we saw reversals 4 straight days. And so
Mhm.
there wasn't a lot of trading, but there were some specific patterns that showed up this week that were very consistent.
Yep.
And so even though I wouldn't describe it as a great trading environment, I would say there were some really good patterns this week to structure off of.
Yeah, and that's funny because I was literally going to ask you about the daily. Every time you thought we were going to push past the level of support, we wick back up. And once we can reclaim those levels in the smaller time frames, say the 15 minutes, something like that, that's where I'm making my plays in the intraday range because I know it's already established. And I don't know, Riz, are you thinking the same thing? Is that how you're kind of approaching this kind of environment?
Well, really depends on what time of day I'm trading. It's been
Yeah.
kind of fluctuating through the week. The morning session, I'm very small on my sizing. We've been talking about that in the morning sessions as of lately. We've had some traders working with Mike during the morning session, and they're trying to follow those big, huge trades he's taking. So just like those traders, myself, I am taking a smaller position sizing and scaling in accordingly. Trying to stay in the winners as long as I can. cutting the losers as soon as I lose confidence in the trade and it starts, pulling back on me. So, that this week has been really helpful to me personally. I know a lot of traders were also struggling the last few weeks, and I'm not gonna lie, I had a bad couple of days in the last
So did
month. So, I'm monitoring my profit targets and my stop losses very closely right now. The midday session, it's been fairly choppy. So, we've been going through strategies, talking about, price structure and really just being patient, especially right now. I can't emphasize that more than ever is that, sizing and be very patient. Wait for your play.
Yeah,
I,
it's
I
funny.
agree with that 100%. Let those patterns develop, and if you don't get it, don't chase it. Like
Yeah.
what I felt has helped me this week, because I like everyday trader. I love level to level analysis as well,
Mhm.
but I also love catching trends. And the
Mhm.
problem is we haven't had a lot of consistency on the trending side of the equation. It's been bank to bank basically this week. One bank
Mhm.
goes to the next bank, and the next bank says, nope, we don't agree with what you guys just did. And that's what's creating that up and down nature of the market this week. Banks aren't supporting one another through the 24-hour cycle. I don't think we're removing from this volatility until I can see Europe and the US support one another from a price perspective, because right now that's not happening. It's creating
Mhm.
this up and down nature of the market right now. And so I think what Rizz just said is very important. You call your shot. You say, okay, I need to see this pattern at this level. And if you don't get it, walk away. Don't
Yeah.
chase it. Like ask for it. There's nothing wrong with asking for a beautiful reversal coming from a low point level, but make sure you get that beautiful reversal with what Jesse Livermore would say is confirmation.
Oh,
Don't try
you
to.
took the word out of my mouth.
Listen. I saw Jesse on your lips, and I was going to be the.
Yeah.
Uh, but no, it's like call for your pattern, identify your levels. It's the same thing we always do, but there is a lack of trust right now in the market to sustain something, and so you're definitely more pattern based, and you're definitely asking for confirmation right now.
Yeah, and I think it's very important that we all mention sizing down and being patient because
It's
I
vital.
know one trader, he was slamming minis at the beginning of the week, made good money, but sent me a screenshot yesterday, blew all of his accounts trading the same strategy, being impatient. And this is what I call peak tilt price action. If you can't catch the bid or catch that pattern you're talking about, you got nothing and you need to walk away, like you said.
Don't be a hero in a moment of volatility.
Mm-hmm.
Mhm.
100%
You're
agreed.
not
And
Jon Snow standing in front of the horde.
I, oh man. Yeah, that's great. And I think we covered a lot in this little session because I think this is very important. This doesn't happen a lot. So we need to talk about this and we need to, have a plan, formulate it. And if we all think the same thing and we're all seasoned traders and we're saying the same thing, we're probably on the right page.
Yeah, I don't think it's just us looking at the last four
Mhm.
days of price action being like, I don't want to see that much of this to continue.
Mhm.
But that's another thing that I feel is very important. And I know Riz has been trading for a long time. I've been trading for a long time, and I've seen these environments. I remember I can go back to August of 2015, and I remember this same 4 day pattern, this exact same 4 day pattern that you're
Oh
dealing with
yeah.
right now. And in fact, let me see if I can go find it just very quick, just very quickly, because just give me 1 second. I can find it very quickly. All right. So you see this right here, kind of this up, down, up, down, up, down, up, down right there. Like I
Mhm.
remember that happening. This was based on a Chinese economic report came out of slowing growth, and it drilled support. And you had this up and down nature. And the ES was not as pronounced as the Dow. The Dow was like 400 points up, 400 points down, 400 points up, 400 points down. And this is just one off the back of my head, but I remember sitting in that environment. It was a terrible trading environment, a terrible trading environment. And I made a statement then to a bunch of students that I've said many, many times, this too shall pass. The volatility will pass. You can see it on the VIX. Every time the VIX spikes above 20, we see volatility events. And if you try to be a hero in a volatility event, the market's going to cut you up faster than anything. It's going to cut you up faster than you could even possibly imagine. So, at what point are we no longer in that volatility? As long as you stay above 20 on the VIX, you're in some degree of volatility. And so as long as you're in a volatility condition, you have to cut size down because you
Mhm.
can't see the consistency of price. You're not getting a consistent price move because volatility is the kryptonite of all things technical analysis. And so
Mhm.
it's to me it's really simple. As long as we are stuck above 20 on the VIX, as long as we're in the up and down nature of the market, this is not a trending condition as of right now. And until it is, you want to be patient, and you want to cut your position size.
Yeah, that's great advice. Yeah. So now that we went over that, let's get into what's going on next week. Obviously, it might be headline driven, might be conflict driven, but there's still other things that are happening, earnings, economic data. So let's get into that next with our next segment, Market Watch. We'll be right back. All right, welcome back. Next, we are going to get into Market Watch, which is where we go over what is important for you as a trader, especially a day trader this week. Now, we already talked about the conflict and the geopolitical environment. It's probably going to be on everybody's mind, very headline driven stuff like that. But we do, if you look at the economic data chart right here, we have a lot of red folders and it's an inflationary week. So, with everything going on, what are you kind of putting together to look at next week, Coach Rizz?
Right now, I'm looking at CPI. CPI Eve is going to give us the narrative, for the rest of the month. We've got, like you mentioned already, the conflict where we've got rising costs. Right now it's interesting right now because if oil prices remain high, what is that going to do for inflation? Inflation is going to rise. It could lead to a sell-off in growth stocks, in anticipation of a hawkish Fed. That's a scary situation for us right now. Things are already expensive. You're going to drive up cost even more, and we're spending even more than we ever have because we're running the largest military campaign that we've ever ran, probably. It's costing us more, that's for sure. It may not
I
be
think
the
we're over
largest campaign.
1.2 billion daily right now, Riz, on that military campaign.
Yeah,
Wow.
I saw the cost of us firing off some of those rockets, $100,000 to two hundred thousand
Oh
dollar
my God,
rockets
yeah.
to take out a
Per
$40,000
pop.
drone. It's
Yeah.
Oh my God, talk about throwing money at a bad problem. I learned a long time ago that you should never do that. But hey, that's why
The
that's
Iranians
why
are
we don't
figuring
marry
out
our
why we
base.
don't have free healthcare right now. There's no doubt about that.
Yeah, they are figuring out. That's a great point.
Yeah.
If you didn't hear that, he said they're figuring out why we don't have free healthcare. That's why.
Mhm.
Yeah, definitely.
That's
So,
hilarious.
I'm kind of keeping an eye on, I'm looking at that. I'm also keeping an eye out on gold, since it's also the inflation hedge. So I'm going to be looking for telltale signs between it as well as crude oil through the week, So definitely, it's still one of those things that you're going to watch those stops and don't marry your bias. We saw a rip on the market on Thursday where, we got some news that China was negotiating with the Israelis to allow crude oil to pass through the channel. So we'll see if that agreement holds water.
Yeah, I mean, you mentioned oil and prices going up, and when I filled up my car today, it cost a lot more than it did last week or the week before. I'll tell you that. I
I
think gas
think
was
we're
almost a
up
dollar
20
high.
cents in the last week.
Yeah.
If not more. It was a lot.
It'll
But
be
yeah,
more.
that's
Yeah, it's going to
great
be
point.
more.
And it all comes together. Inflationary data as we're spending more. I mean, so great points, Riz. Now, obviously, we already talked about Iran. We talked about economic data. What's some underlying things, maybe earnings or just general things about the market that you're kind of looking for this week?
You know, the number one thing on my mind is kind of similar to Riz,
Mhm.
the inflationary side of the equation. The Trump's economic agenda is max growth on steroids, is what it is. And you can only do that if you have a interest rate environment that is more dovish in nature. And with what's happening with the military actions in the Middle East and
Well,
what's
Matt,
happening with,
can I interject real quick?
yeah, of course.
Can you do a 30-second definition of hawkish and dovish that people aren't familiar
Oh,
with
yeah.
it?
Hawkish is just when the Fed is expecting to raise rates, and dovish is when the Fed is expecting to lower rates.
Okay.
And so coming into this year, we were expecting a dovish Fed because we were expecting two interest rate cuts on the back half of this year. With what's going on with inflation, and it's before we even saw it coming out of crude oil this week, We saw the PPI report starting to elevate. We saw the PCE report starting to elevate. And so we're already on a footing right now where the Fed is having a hard time embracing those cutting cycles. And so when you talk about oil going up, 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 you're talking about a risk to the entire economic agenda of the United States of America right now. And that is a major flaw in the economic analysis. And so I do think the CPI report is going to be a very important report this week. I do think the PCE report, even though it's not going to get a lot of love because of what's happening in the Middle East, what's happening with crude oil itself, but these reports are going to be very important to keep an eye on because they will ultimately have an impact on how the Fed raises or lowers interest rates. And if we start to see inflation bump up and up and up, that pro-growth strategy coming out of the Trump administration from an economic perspective is going to do nothing but spark inflation and stagnation. And that's a very important part of the puzzle. So that's something I'm keeping an eye on the same way that Rizz is. But when you're looking outside of that, I do think there's some important conversations to be had next week as well. And first of all, on the earnings side of the equation, you start to get in, and we're not in earnings season. We get a select few earnings reports every week. But next week, you get a couple software and infrastructure companies reporting. And I am very keenly focused on this software reversal that we're seeing play out in the market. And so, how I describe a lot of the problems in the market right now is top of the market problems. For example, you look at industrials and you're starting to see industrials break trend, break pattern. When you look at the Dow Jones, you're seeing something very similar. Market break structure, market break pattern here. When you look at the ES, the S&P 500, you have a general understanding of neutrality and shifting volatility here. You're seeing concern, but all of this is top of the market issues. What you're not seeing is when you deal with some of the bottom areas of the market, as you can see in IGV. IGV is one of the most aggressive areas of the market. This is this AI software trade, is what it is. And in the past week and a half, all we're dealing with is elevated inflation, crazy economics, crazy geopolitical activity, increasing volatility against the top of the market. And you're telling me software, despite all of that, is doing nothing but go up, 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 and up?
Yep.
Like that stands out to me. And so is this the early beginnings of something, or is this just kind of a, undervalued pickup zone?
Well,
Next,
Matt, we've seen a lot of AI contracts get tied into the military
Mhm.
in the last week or two. So
And that's
that
going to
could
happen
pick
more
up
and
some
more
dynamic.
too. Yeah.
Yeah.
And so when you're looking at kind of the major companies reporting earnings next week, Oracle, Adobe. And think about this from an Adobe perspective really quickly. Michael Burry, who was the big short guy, okay, back in the day. He was the guy that shorted the S&P 500 against the subprime meltdown. He came out 6 months ago and was like, the AI trade is dead. It's overvalued. It's terrible. Well, guess what? 6 months ago, when we were dealing with this 6 months ago, all of a sudden, boom, 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 you're dealing with the top of the market. Guess what Michael Burry bought this week? Michael Burry
Ooh.
bought Adobe this week.
Okay.
And so you're having, and it's not just Michael Burry. I'm seeing a lot of people, big time investors, start to take positions on individual components and software. You also saw Jensen out of Nvidia in their earnings report last week. He stated, "quote The market has software wrong." Has it wrong. Centrini came out with an article a week ago saying the death of software, and software's done nothing but go up ever since. And so, to me, like one of the biggest questions I have for the market next week, outside of just the intraday side of the equation, is are we going to see the continuation of the good reversal development in software that stands out to me like a sore thumb? Well, Oracle's next, Adobe's next. You get a couple software components next week to give you catalyst. And guess what? Out of Broadcom this week, I said Broadcom was one of those stocks I was looking at last week. Broadcom today raised guidance by 8%
Oh, wow.
today. And so you're starting to see some things happening on the AI trade. And how I see this is very specific to those two massive trades. You have the QE trade, which is the cyclical trade that started in December with industrial, energy, basic materials, the Dow Jones, and all the cyclical components when the Fed announced quantitative easing. That is now at the top of the market and they're breaking structure. Well, as that trade was working out on cyclicals, technology was going down. Technology's been lagging everything except the last week. We're seeing tech outperform and we're seeing cyclical underperform and we're seeing cyclical break trends at the top while IGV reverses at the bottom. I'm kind of interested in that IGV reversal and seeing if tech can take some leadership. And one last thought on the rotation here. You also see Mag 7 start to get short up a little bit. Amazon's had a good week. Meta's had a good week. Tesla's had good development this week. The only one that has a flaw in it is really kind of Google and Apple. But yeah, I think the software trade and Oracle and Adobe's earnings report definitely secondary data. They're not primary data next week, but they are certainly going to impact that software trade.
Yeah, I mean, software, conflicts, inflationary data. We got a lot going on. It's funny you mentioned Amazon.
It ain't going to be a boring week.
Yeah, you mentioned Amazon. A friend of mine texted me, "It's a good time to buy Amazon," and I responded later in the day, and it was already up 3%. So I said, maybe not
But
today.
like
Maybe
yesterday
not at
was
the
a
end of the
better day.
Yeah, yeah, exactly. I was like, you might want to wait for a pullback. But yeah, that's great.
You don't want to chase
So,
these things.
yeah. All right, next is my favorite segment, Coach's Corner. We have questions from real BluSky members. These are a couple ones from newer traders, and I know these newer traders' questions. I had these questions too, so I can't wait to see your answers. We'll be right back. Now, next is my favorite section, Coach's Corners. I have two questions fired and ready to go for these coaches, and let's just get right into it. Question number one. Let's do you, Coach Matt, for this one.
Yeah.
What's a piece of trading advice that everyone repeats over and over to new traders that you actually disagree with?
Such a
Because
good
we all know
question.
there's so many
Really
generic
good
things that
question.
people say to new traders, right?
All you need is this.
Mm,
First of all, I disagree with anything that starts with all you need.
the hook.
That's number one. You say all you
I
need,
think I
I'm
see
out.
that a lot. I think I
Yeah,
see
I'm
that a
out.
lot.
Yeah,
That's
I'm out. I'm
every
out.
Instagram video. This
Yeah,
one strategy.
just yeah, all you need. Nope, I'm out. I'm out. If that does not end with all you need is an understanding of price action, then I'm out. Done. Gone.
Love it.
Yeah. So that's number one, but I'd say a little bit stands out to me because there's a lot of things that I've heard along the way that are ridiculous.
Mm,
I would say from the biggest picture, I think one of the biggest upcoming problems for our society is the retirement crisis.
okay.
And for 40 years, our society has been sold that all you need is a well diversified portfolio as allocated in mutual funds to be able to maintain retirement status. We've had 40 years of evidence, and that's the biggest lie that anybody has ever told that you just need to work for 40 years to save your money into a retirement account in a well diversified approach. And they don't talk to you about the 70% of those gains that get sent back to the purveyors of the services. All you need is to understand that you can do it yourself. You don't need Wall Street. That's the number one thing. Wall Street has sold America on a bill of goods called the 401k model. And that 401k model has done nothing but make Wall Street rich and make everybody a slave to the system over time. And so I would say the biggest lie that has been told in the financial world over the last 45, 50 years is the all you need is a well diversified portfolio that financial advisors have sold to people throughout all of time. And the ultimate question I have for you guys is how many people do you know in your life that had thought they were going to retire, but now had to go back to the job market?
Oh, it's so many people, and everything's more expensive than you thought it was going to be. So
Because
that,
if you saved your
yeah.
money 40 years ago, it doesn't have the same
Mhm.
value today.
Yep.
Mhm.
Yeah.
Riz, I'm sure you know plenty of people. Oh, I'm going to retire by this age. Nope.
Yeah, and without the proper planning and starting off very easy, it becomes a very, very challenging thing. And every probably 6 to 7 years, it'll become probably even more and more impossible to do. that you would really need a really big win or something like that, or leverage your money in a way that you may not be necessarily comfortable with. So, I definitely recommend starting early.
Great point. Now, you already said that. Now, what is something that you believed in very early on that you had to completely unlearn? And maybe that's something that somebody told you, that one of these everybody repeats things that they tell new traders.
I think at the very beginning, it was all about just keeping at it and, going in and being aggressive in the market. I think that was a early thing that I had learned, being in the groups that I was in. A lot of the traders I was with were very aggressive, novice traders, not as experienced. So, I picked up some bad habits there at the beginning, oversizing, under, poor risk management of the trade. And I learned very early on, what not to do and what I didn't need to be doing at the very beginning.
Yeah. And that leads me into the question that I really want to ask you, Rizz, is trading more about patience or about aggression when the opportunity finally shows up?
I know what Coach Mad would say. And me, it's all about patience, and the reason I say patience and without the aggression is because you always have to have a cool, collected mind, to be able to manage a trade, not lose your cool, because if you get too excited, too emotional, it can get you off keel, that you won't manage that trade in a great perspective. And you got to trade the same way all the time. You always have to be it creates the repetition, because then you're incorporating the mechanicalness to the trade. You can absorb the loss, acknowledge that the trade didn't work. You met all your confluences. Then you can quantify it. You can't just say that, oh, well, I was just an idiot and I just took a random trade. You said, I quantified it. The trade didn't work out. It's invalid. We move on to the next one. And it allows you to move to that next great trade that's going to make you profitable.
Great point. And now, Matt, I saw those wheels turning when I asked Rizz that question about something you had to unlearn. I know you got something to say.
I've had to unlearn a lot of bad habits.
I think that's part of the journey, man.
A lot of bad habits. It's amazing how much you think you know at 28 years old. By the time of 38 years old, you're like, that was the dumbest guy in the history of mankind. So yeah, I was chuckling a little bit just thinking about my own saga and my own story, and being a hungry, very aggressive, trader when I was younger. That level of aggression taught me some valuable lessons when it didn't go your way. So I was like, okay, now let's embrace some cash flow. And then it's like, all right, cash flow is boring me. Let's get back to some direction. I think there's a place in a portfolio for a lot of things, but I would say most things I learned when I was younger as a trader, it's not that they were wrong. It's not like there's a one end all be all of doing this, right? There's a lot of different snowflakes in the marketplace. What I would say is it probably lacked context and completion when I first learned things.
Mhm.
And so I don't want to suggest that it was completely wrong, but it did feel like when I was a younger trader, I tried to do too much in terms of everything. I wanted MACD, RSI, my moving averages, my price, my this, my that. I wanted the heavens and the earths to align for me to process a trade. And, you know, yeah, that's one way to go about it. But trading is about trading, it's not about perfection, it's about an edge. And so, as long as you got the edge and you're structuring a good reward to risk ratio, you have the probability, you're good to go. But so I was just kind of chuckling at my own story a little bit as Rizz was talking. I will agree with Rizz on the patient side of the equation that patience is a position. It's a trade. You're I call it hunting. You're hunting the pattern, right? And while you're hunting, a lot of I don't know if you guys have ever hunted, but a lot of it's patience. It's
You
not
gotta sit
all
there and
it's not
wait.
all
Yeah.
action all the time. A lot of it's sitting around doing absolutely nothing and waiting for your right spot. And when you get it, you take the shots. And that's kind of how I see it. I was looking at, to give you an example, I was looking at a pattern here today. And the pattern was dialing in between 6780 and 6800. It was a 20-point range. And I'm willing to bet there were traders that went long and short within that pattern. I'm willing to
Oh,
bet
so many, so
traders that
many.
got stopped out inside pattern. And here I am just sitting here kicking my feet back, not doing a damn thing, waiting for the pattern to come to a proper conclusion. You can't force pattern development. You can't force when the pattern comes to a completion. You can't force when the pattern breaks out and gives you confirmation. All you can do is ask for what you need and then wait to get it. And if you get it, pound on it. And so I kind of feel like it's very similar when you go out hunting. You be patient, you wait, you wait, you wait. When you get your shot, you take the shot.
Yeah, and I know we say patience a lot, but every real trader, every full-time trader I talk to is the same thing. And me specifically, I'd unlearn that you had to trade all the time, that you had to be in a position all the time. And now, like you said, you kick your feet back, you wait for the setup, you be patient, and you be consistent, and that's how you make it in this game.
Well,
Great
can I give a
questions.
little PSA advice on that? Because I
Oh,
like what you
we
said
love your
there.
PSAs.
It's say what you were saying again, just really quickly.
Don't always have to be in a trade. Patience is what makes the
Okay.
game. Be
Because
consistent.
it's not, new traders thinks it's all about them.
Hmm.
They think it's all about them. The whole market's about them. These little narcissists think everything is about them. Has nothing to do with you. Has nothing to do with you. It's about the market. The market's always right. And the very second you accept that truth, the very second you're going to be a much better trader in the future. It's
Hmm.
not about being right or wrong. The market's always right. It's about taking advantage of the market when it gives you the pattern and the trade that you're looking for. And so patience is a position because it's not about you. You might want to go out there and force the action. You might want to go out there and create price. Guess what? Every time a new trader ever tries to create price, they get steamrolled by somebody who knows better.
Yep. And I know the answer because you already said, oh, this is for Rizz. It's the market knows everything. The market, does the market care about you, Rizz?
No, not one bit,
Yeah.
brother. Not
Yeah.
one
And when
bit.
It only cares about your liquidity.
when you
It just
start
wants
thinking
my
it does
money.
care about you,
Yeah.
when you start thinking it cares about you, it shows you it doesn't. You're nothing,
Oh yeah.
right?
It's like
No, that's a great
wrong.
episode, guys. I love the conversations. I can't wait to have Coach Becky back next week, add it to the mix. But it's been so much fun. And guys, remember, we have streamers on all day, amazing traders, free education. If you've never traded before, you will learn something. And if you've traded for a while, I can guarantee you learn something also. So we're on every major platform. Code WELCOME26 for 50% off your first launch plan. And until then, stay profitable.